Right. Well, happy Uranium here. It's Wednesday, the first day of spring. It's a fantastic day outside in Boulder, and I would like to go on a run here, but I got distracted by URG. UR Energy, officially Lost Creek ISR LLC, came out with some news from Wyoming that they got some permits extended and a possible new mine site, which is crazy. And it's kind of weird timing with this 232 stuff. There's just so much 232 positive news that it's hard to assume that nothing is going to happen. So a few things, obviously, they just put through that like 3 million something um, bill to support the nuclear plant in somewhere in the east, and that's a positive. Um, Rick Perry just had something about nuclear. They're doing deals, six deals we got done with India. So there's just a lot going on where it seems positive that the U.S. government's focused on these things. So you got that, and then that auto situation where they're not going to let people from, I don't know, putting tariffs on cars. Just who knows what it is, but it definitely shows the protectionist measures. And that doesn't sound like there's a full. I just listened to that news briefing, and it doesn't sound like there's 100% chance that it's going to happen how people currently think it will. So who knows? That's the backdrop why I'm looking at URG, but I'll try and run through it. Basically, I think this time the best idea I have is just to go through P&Ls, balance sheets, try and get to a valuation. And I have like all of this on a spreadsheet that I'll try and put up somewhere, but if not, this is basically what the 10K had in it. And I guess the summary, just to start, it's a company based out of Centennial or Denver, Colorado. It's run by Jeff Klenda, who started the company, was a founder initially, and then someone else ran it, Jeff Heili, who's with Peninsula right now. So he came back, and they've been really conservative. So they've kept hedged bets for a long time compared to UEC unhedged, just losing money. And he's done a really good job of maintaining the capital structure without raising too often and doing any crazy purchases like you would, Energy Fuels. But so he's done a really good job with that. One thing is that they had a board seat change. One guy, I think he was in the, I don't know if he was in the Canadian Hall of Fame, but he had a lot of, I think he was. And then they just got this new guy, Rob Chang, who you can see him on interviews on YouTube and stuff. Not quite sure now. I'll pay way more attention, but I wasn't extremely impressed initially. Maybe I wasn't paying attention. But so he's from Riot Blockchain. He's their CFO, which is interesting. Kind of that blockchain uranium sort of connection that seems to be flowing through the space currently. Even though the price of uranium is dropping, so yikes. Anyway, so starting with the P&L, they had $23 million in sales, basically 100,000 pounds at $48 a pound, and then basically their COGS were like 23 to 26 per pound. So they had almost 50% margin is what it was initially. And that sounds amazing. If I could extrapolate that out, and I was probably way too generous in this cash flow situation here because they spend a lot of money on operating expenses. So you got $4 million in exploration and development, which seem to be well used. And they're still exploring a little bit, which is interesting. They also just got this gold situation where I believe that they're going to try and just monetize it by selling it off to someone else. And the most ridiculous point, and I just can't, these numbers seem to be absolutely crazy, but general and administrative, 5.4 million. You know, they're making 23 million in sales. So seems to be overstaffed. It's an expensive industry. Maybe that's not insane. I'd love to look at it a little bit more, but they are doing a workforce reduction program, which is really impressive. Like, they've done the right steps. So I might just be misreading that line. And they reduced the workforce again by a certain percentage. I didn't see how much. And then what they put on the 10K as the reason for this increase was necessary to outside legal and consulting work. So I'm not sure that all of that was actually related to that, but that's what it is. So basically, in the end, they break even. They've broken even for the last 2 years. Definitely last year, and it seems like they could continue to do that going forward. So if you're looking at like a floor on risk right now, you think they're going to make zero profit. Next year, they're going to make the exact same sales and gross profit, certainly. So you assume they have 6.4 on the balance sheet right now in cash. They're going to burn 5 million a year, is what they say. And the only reason this year is that they actually made money was there was some pull forward of sales of contracts from 2021, which is insane. Why would you do that? I guess preserving capital structure again. But you can see offtake agreements they have in 2019, 500,000, 2020, 390,000, 2021, 25,000, and that's it. So they're still way more hedged than others, but pulling forward that contract for 3.5 million is kind of basically like taking off a liability or something. So in the end, they also have 10 million in inventory. So their balance sheet is actually really good. And just going down to what I think this company might be worth, intrinsic value here currently would be based on investor price. They did a $10 million raise last year at 82 cents. And they also had a warrant on there, which is a bummer. But if you put that moderately where it's at right now, it's a $140-ish million company. And then if you look at a prior cycle price, this is just looking at basically similar size companies producing similar amounts in the last cycle. And I'm just taking a ballpark number, but I think $360 million is a rational number to put there. And then if I look at cash flow, this one's way too high, actually, now that I'm thinking about it, is if they had a delivered margin of $10 per pound, assuming that operational costs are baked in there, which that wouldn't be the metric you use, but if they could make $30 million a year, if you discount it, I'd say it's $640 million company. So I take those average, I'm getting $380 million company. And then the risk is they maintain 2 years of capital structure. They can burn cash, sell inventory. But if 232 goes through, they're going to have a lot more. They could double, which would obviously allow them to sell a lot more uranium, keep the cost lower, spread out their fixed cost. And I really like the management. I think it's a really good company here, even though the price is moving up. You say 80. If you look at this from a long-term perspective, that's a fantastic deal, and you just got to keep buying it. So, yep, that is UR Energy. Pretty cool company. Have a good one, guys. Peace.